Welcome back. Today we're going to analyze Microsoft Corporation and their latest Q3 earnings report. Microsoft is one of the biggest companies in the world, and I find it very good to analyze their economic situation and the performance, because knowing Microsoft you will know a lot about the market, and it will help you in your investing thesis overall. So what we will do is going through the numbers, the revenue, the gross margins, etc., and also analyze the different segments of Microsoft business. And when doing that, we will get a good understanding of where the company is at the moment. And obviously Microsoft is a big company doing all sort of things like artificial intelligence, selling their Office 365, they do the Xbox, etc., etc. So they have a lot of businesses going on, and obviously they're a big cloud business. So by knowing Microsoft and their performance, we will know if we are in a type of market that will be good for a lot of tech companies. So let's get straight to it. The revenue this quarter was $70.11 billion. So that's quite substantial sum, and it's a 15% growth in constant currencies. So they are, double-digit growth is very good for such a large company as Microsoft. So I find that truly impressive. The gross margin was 69% this quarter with $48.1 billion. So gross margins is the revenue you have left after removing cost of sold goods. So the cost of getting your product out there in the market, it costs a lot of money. So you have to remove the cost there to get the gross margin. And the gross margin of 69% is very good, especially if you consider all the investment that Microsoft are doing at the moment. So quite impressive. And also the growth there in gross margin was about 11%, so a bit slower than the revenue. And through that we might get a clue that Microsoft are investing a lot of money at the moment, doing that to continue to grow and gain market shares in their different businesses. The operating income was $32 billion, so that's about a percentage of 46% of revenue. Still very good, and a growth of 16%. So some good efficiency going on in Microsoft. They are really earning a lot of money at the moment, and they are investing a lot of money, and obviously increasing their dividend payments, etc. So it's an economic sound company, and in this type of environment with a lot of things going on in the world with tariffs, etc., I find Microsoft a nice company to park some money in, and that is actually what I'm doing. Why their earnings is extra interesting for me. The net income was $25.8 billion. So that's just one quarter. So in a year it will be over probably over $100 billion, depending on how much they will invest, etc. So that's about a diluted earnings per share of $3.46. So they're earning a lot of money, and that's about 19% more than the last year. My feeling when I analyze the quarterly reports of Microsoft, it feels like they kind of owning the pace they are expanding in. So if they want to expand the earnings with 15%, they do that. If they want 8%, they do that. If they want 25% earnings per share increase in comparison with last year, they do that. They are so powerful, this company. But it's all about the long-term strategic view of the CFO and the CEO of the company, because you have to do a lot of investments. And if you listen to the earnings call, you can hear the CEO talking about Moore's law and the technological development going so fast now in terms of AI and improvement of CPUs and GPUs, etc. So they have to find that sweet spot between continuing on their current infrastructure and also invest more to gain some advantages of the new technology that is out. So keep that in mind. They have a lot of growth in commercial bookings, about 18% year over year, and they have about 315 remaining obligation in billions. So they have a lot of bookings. They will earn a lot of money the coming years. So this company is doing really good. The Microsoft Cloud revenue was $42.4 billion. So that's also a huge increase in comparison with the $35.2 the same period last year. So that's about 22% growth there in the cloud revenue. And also the Wall Street expectations, they have really kept an eye on Microsoft and their performance in terms of the cloud, the Azure Intelligent Cloud, etc. So performing good and growing at the pace they are doing. They are really surprising the market here, showing that they are maybe the key player in terms of the cloud business. So it's kind of the same business that Amazon has for their web services, and also that Google are trying to grow, and Microsoft are really a key player in this segment. And they had a decrease in gross margin here in the commercial businesses. It's 69%. Last year was 72%. And the leadership of Microsoft addressed this as a lot of investments going on to long-term positioning the company for continuing growth. They are stating that they are scaling our AI infrastructure. What the CFO did say on the earnings call was that the huge overperformance wasn't in AI this quarter, so it was like the more traditional cloud business. But she also stated that the AI business and the normal traditional cloud business are like floating together more and more for every month that is going on. So it's kind of hard to just say, oh, this one was performing better, but maybe it was performing better because all the AI is helping. So I don't want to make it too complicated, but they kind of report in different segments, like one AI segment and one more traditional cloud. So yeah, it was a question about that on the earnings call. Also, they said they returned a lot of cash to shareholders. Happy. 9.7 billion to shareholders with $6.2 billion in dividends. Always nice to have some cash flow going into your accounts through dividends. Also, $3.5 billion in share repurchases. So they buy back some shares in. Meaning if you go in and want to buy the Microsoft stock, the company also buys some of that available stock. And when they do that, there are less stocks outstanding from the company, meaning the earnings per share will go up. Also, the biggest companies like Microsoft, they like to have stock options for the people they employ, especially like higher ups, bosses, etc. So when they provide stock options to employees, the shares outstanding will be more. So they need to buy back shares also to keep the balance with the number of shares outstanding. So you have to really dig deep into like the cash flow statement, etc., to see if the total number of shares outstanding is actually decreasing, because sometimes they are stating, oh, we are returning cash to shareholders, but on the same time they might have increased the number of employees that have stock options. So keep that in mind when you invest and read these type of statements. The operating expenses were up about 2% to 16.1 billion. There are a lot of investments going on in AI and the cloud. They also stated that they have an effective tax rate about 18%. So yeah, obviously all companies pay some taxes. Nothing strange there. And yeah, the cash flow from operations were about $37 billion, so quite impressive. They are really gaining a lot of cash from everything they are doing, and that's up 16% year over year. So I mean, for a lot of investors, cash flow is the most important metrics. It really shows how much cash you can free up from everything the services you provide and the goods you sell, etc. So having a lot of cash flow is a true metric for a sustainable company. It's even maybe when a company are very small, if you start a company, sometimes you might have a decent result, but if your cash flow is very bad, you will have a problem to continue your operations and having your company alive. So that's kind of the extreme part of cash flow and why you need it. But obviously a huge company like Microsoft, there are no cash flow problems, and they also have a stockpile of cash that is insane. So nothing strange here. Also, the free cash flow was about $20.3 billion, down 3% year over year. And the free cash flow in comparison with the normal cash flow is affected by a lot of investments. So a lot of higher capital expenditures to support the cloud and AI offerings. So they are really, despite having the earnings per share really increasing this quarter, they still invest a lot of money. So this company here, Microsoft, they really have a lot of things going on, and I feel quite safe, I would say, to be an investor in Microsoft. Some businesses highlights according to their earnings presentations. The Microsoft 365 products, the classic Microsoft, Microsoft Word, now they call it 365, Microsoft Excel, etc., were up 14% year over year, driven by the 365 commercial cloud, and also 365 consumer products and services increase 12%. So the traditional business here is going very good. LinkedIn revenue was up 8%, and LinkedIn is a service you use it to find jobs, etc. It's very big. I think it's all over 1 billion users. It's very big in a lot of areas in the world. So and also, they gain tremendous amounts of data from all the services they provide, and they use it to improve their AI offerings, etc. So is this 365, they have like this overall offering that just keep gaining more data to make them more like superior in the market. So everything this feeds to Microsoft long term. They have the Dynamics products. That's kind of similar to like the Salesforce type of products with customer relations management, etc. And the services here was up 11% or 13% in constant currencies. So when they report Microsoft, obviously they have something called CC, constant currencies. So depending on the dollar value in comparison with other currencies around the world, the revenue or the earnings can vary. Why they have like one report where it is without CC and one with CC if you read the earnings report. And the Dynamics 365 revenue growth was up about 18%. So you see here a lot of double-digit growth in a big company like Microsoft. It feels like they are really going hard here. Also the intelligent cloud, the future of Microsoft, the intelligent cloud, you can hear it yourself, up 24% year over year, amazing. Driven by Azure, they call it spelled A-C-U-R-E, A-Z-U-R-E, so Azure Cloud. Just Google it and you will find Microsoft Azure Cloud. So yeah, that and other cloud services revenue was up 35%. So that's going really good. Wall Street was a bit defensive on the Azure Cloud growth last quarter. So seeing this type of knockout really is really good. And obviously we know that it was last week that Microsoft reported, and the stock price has really responded good on this earnings report. So keep that in mind, that what I'm telling you here is mostly above expectations, at least the short-term expectations from Wall Street. So yeah, the more personal computer here, they have the OEM and devices revenue increased 3%. So the personal computing side for people like you and me.